Good morning, everybody, and thank you for joining us here today. We've got an update here from Ionic Rare Earths, which should be pretty informative for everyone and the good audience as well. We'll welcome the Managing Director, Tim Harrison here, who's going to give us an overview of the recent resource update and a little bit more in depth as to what's going on around with the company. So I'm going to hand it over to Tim to take us through that, and we'll have some questions at the end.
Thanks, Peter. Yeah, look, earlier this week we announced a tremendous increase in the resource estimate for the Makutu Rare Earth project. We've now increased the mineral resource to over 500 million tonnes. It's a 70% increase in the previous mineral resource estimate, which now stands at 532 million tonnes at 640 ppm total rare earth oxides. So, that represents a significant increase in the overall resource. But importantly, we've seen a 400 million tonne indicated resource base now at Makutu, which will underpin the feasibility study, which we're aiming to have completed later this year. Importantly, that increase in the indicated resource is a substantial increase over the production target that we'd previously used for the scoping study, which was completed last year. So we are, potentially going to see, well, we will see a significant increase in the potential mineral inventory for the feasibility study. But importantly, it will enable us to look at the potential to maybe ramp up the projected feasibility ramp up faster and potentially a larger throughput. So there's a number of scenarios that we can now look at with regards to the feasibility study, which is hugely exciting for the company. Beyond that, we've now moved the resource. 76% of the total resource at Makutu is now indicated resource, and we still have substantial amounts of exploration ground out to the east and northwest. So we'll go back and we'll have a look at the exploration target. We'll do some more work and plan up a further reconnaissance and scout drilling program that may be able to help us understand just how big the deposit is at Makutu, knowing that we've got more than enough now for us to be able to move forward on the feasibility study. And I suppose that the last thing there that I really want to cover off on is that, we've now cemented Makutu as being a very unique asset. It's one of only a couple now of ionic adsorption clays that are near development ready. Importantly, our product is available and there's significant interest in the product that potentially is going to be developed from the Makutu Rare Earth project into new rare earth supply chains that are going to be formed in the US and Europe. So it's really positioning the company now for a very big next 6 to 9 months as we work towards the finalisation of the feasibility study and a mining licence application at Makutu.
Take myself off mute. Tim, the indicated resources there increased 512% to over 400 million tonnes. Where does that put Makutu's scale in terms of global peers that are already in operation today? And are there any of these operating mines of that scale outside of China?
Look, at the moment, there are no other operating ionic adsorption clays outside of southern China and Myanmar. So we're in a very unique position. There is a large ionic adsorption clay project being developed at the moment in Brazil. That does have a substantial indicated resource base. But I think that the potential for Makutu to grow substantially beyond what we've already defined to date is fairly significant. We do have a 37-kilometre long mineralisation corridor, of which we've drilled only 26 kilometres. And within that 26 kilometres, we've really only targeted previously the radiometric anomalies. We did some scout drilling last year, which has identified the continuity of the ionic or rare earth bearing clays across that full 26 kilometres and out the full 37 kilometres as well. So, the potential is that Makutu will get larger with more work. And this is why we're looking at the potential for for Makutu to be a 50+ year life of mine operation, it's a fantastic deposit. It's extremely unique. It's going to produce the magnet and heavy rare earths that the world is going to need in increasingly more quantities as it starts to look at adopting technologies and implementing technologies to work towards net zero or net zero carbon technologies and policies. So I think we're in a unique position. We've got fantastic tailwinds with a resource that will get larger with more work.
And interestingly, Tim, the forecast growth in EVs, as everyone knows, is quite extraordinary, and China will be leading that volume. Surely they'll be wanting to put their foot on their own country's resources. How do you see that supply gap looming for the rest of the Western world, who will also be hungry for the heavy rare earths, for magnets and EV production?
Well, what we're seeing now in China is effectively a doubling of the magnet production capability. So, China is going to start producing more magnets to go into motors to support Chinese-made EVs. What we're seeing now is Western EV manufacturers starting to understand the constraint that is coming with regards to being able to source their own magnets and motors. There's been tremendous work previously done around lithium and lithium-ion battery supply chains, but very little attention paid to magnets, motors, and as such, with the forecast growth of an 8-fold increase in the requirement or the development of EVs by the end of the decade, I just can't see where the 8-fold increase is going to come from in the supply of magnet rare earths. And beyond that, it's the heavy rare earths, it's the DYTB that are going to be the most increasingly difficult to source.
So it seems that there's been a lot of focus. I know Australian markets are laser focused on battery materials, but much of that investor market has forgotten about the actual, how you're going to make the components of the motors, which importantly is not only things like copper wiring, but the magnets for electric motors, which is where you'll stand out. So that helps you as a key strategic project in the near term for that global market, and being an ionic clay project, possibly something that can come into production faster than a hard rock project?
Oh, definitely. I think that's the appeal of the ionic adsorption clays. They're low capital, they're modular, very simple processing. And so you don't have the long lead times and the long construction periods that are required to build the more capital intensive hard rock processing plants, the concentrators, the cracking, the separation. So I think it provides Ionic and our Makutu Rare Earth project with a potential to develop the asset faster, to ramp the asset up faster, and to be more responsive to the increase in demand. And beyond just EVs, I mean, if you look at the requirement for offshore wind, I think global capacity at the moment is around about 36 gigawatts of offshore wind capacity. By the end of this decade, they're forecasting that to be over 300 gigawatts. So again, there is going to be a competing demand for EVs and offshore wind with only limited new supply coming online. So again, Ionic is standing out with its Makutu Rare Earth basket as being a project and a product that does supply new supply of magnet rare earths, but again, focusing on the DYTB, which are the two elements that you really can't substitute out of the high intensity magnets.
And that's the next question I have here. Can you talk about the makeup of the heavy versus light rare earths in the mix and the attributes of that ratio in your deposit, and I guess then how you see the different product baskets that you're looking to produce?
Yeah, so in situ mineralisation at Makutu has around about, I think about 42% critical plus heavy rare earths in the ground. We see a favourable extraction of magnet and heavy rare earths from the processing of the Makutu ionic adsorption clay mineralisation. whereby, the extractions of those elements are typically double that of the low value lanthanum and cerium, which are the light rare earth elements that really, are in excessive supply at the moment. So we see an upgrading of the in situ mineralization to the basket, the product that we produce. And, the basket that we produce is around about 73% magnet plus heavy rare earths. So we do see a significant increase in the basket value and the margin potential from the Makutu Rare Earth project relative to other projects being developed globally. It's a well-balanced basket. I think if we look at the individual magnet rare earth component of the Makutu basket, it's about a third of the product. But that 1/3 of the product, based on current forecast pricing, represents over 90% of the value of the basket. So, we do see a product that has an immediate application in a growing market that simply can't source this material in the right composition elsewhere.
And this increase that we've seen now, that was reported this week, will that impact the production profile or the value of the overall project?
Look, we've got to do the work. My expectation is that now with a larger resource, and certainly seeing some very favourable tailwinds at the moment and substantial demand for the potential product at Makuutu, potentially we will look at ramping up the asset faster. Potentially with this larger resource, there is scope to look at increasing the production volumes, the plant throughput. So these are all the scenarios that we'll now look at through the feasibility study. We do have the modular approach with Makuutu, which means that we can scale production to be very responsive to the demand of potential partners, which again is a big attraction.
Which beautifully takes me into the next question. You've just had a whirlwind tour of international conferences and seeing some potential investors and potential customers. What do you bring back? What's your feedback that you can pass along to the market that you found, that insights from talking to various people out there offshore Australia, where we sometimes get a little bit closeted?
Yeah, look, I think, globally, looking at the footprint that's emerging on EV production capacity, it is astounding how much investment is going into the EV supply chain. And beyond, obviously, a lot of work that's happened in the lithium-ion battery space, very little work has actually being undertaken in the magnet supply chain. So what we are seeing now is, a tremendous amount of interest with EV manufacturers now trying to identify who the potential partners are that are going to, work with them on forming these new supply chains. And the desire is to get this moving as quick as possible. So, our timeline and our ability to bring Makuutu online in a modular and responsive manner is of significant interest. And with that, producing a basket of rare earths to be able to potentially feed into our own refinery again puts us in a unique position where we can actually work with these EV manufacturers in partnership to build these new supply chains. So we're in a great position to take advantage of, the capital that's being committed to, EV manufacturing, and the fact that this material, the magnet rare earths, the DY, the TB, but in addition to that, we've got substantial amounts of neodymium and praseodymium as well. So we're in a position to take full advantage of the demand and the complete lack of supply that's potentially going to be able to be brought online by the time that these EV manufacturing supply chains are required in the next few years in both North America and Europe.
And Tim, further to that, can you touch on the progress with Serentech?
Yeah, so we've now completed the acquisition of Seren. The guys are now are working with us on integration of Serentech into Ionic. We're working on initiating the next phase of piloting it in Belfast, and we're looking at setting up our own facility in Belfast as well. So, there's a lot of work that's now underway to position us to be able to also support a lot of the refinery development work, being able to do test work in-house in Belfast, and also being able to leverage the technology now into new relationships and potential partnerships in Europe on magnet recycling. And for that matter, the ability to integrate magnet recycling into our own refinery. There's a lot of opportunity now for us to become significantly integrated in these new supply chains. So that the acquisition of Seren, I think is something that's really going to add a lot of value long term.
And so I'd like to hear, you touched on a little bit so far, but your take on the global landscape for the rare earths market, just maybe summarise that. And then understanding that project development is a mix of art, science, politics, government process and supply chain. When would you like to see commencement of development of Makuutu?
Okay, so global landscape on rare earth supply. There simply isn't enough being brought online now. Like, the demand is coming and the projects are simply not being developed at the rate that's required to be able to satisfy the capital that's committed to the EV supply chain, for example. Typically the time it takes to bring online complicated process plants is significant. We have an advantage with Makuutu in that we're able to use very simple processing, low capital and modular to be able to bring this production online relatively quickly. But simply there's not enough happening now for the demand that's coming and the EVs that will be, potentially in production in the next few years. We're in a great position. We're in a and I don't think rare earths really it's a commodity, it's a technology metal. The overall value of the rare earth oxide supply market globally is around about 10 to 15 billion per annum. But the industry that's enabled by that, it's almost an 1,000-fold multiplier. So there's somewhere between 10 and 15 billion dollars worth of 10 and 15 trillion dollars worth of industry that's enabled by that rare earth supply. So there's simply not enough, and there needs to be more of the right rare earth brought online. And again, that's where we're standing out. With regards to my perfect timing on the ability to bring Makuutu online and get into production as soon as we can. I think the market's crying out for an alternative supply of magnet and heavy rare earths. We tick the box as far as being able to work with Western supply chain demands on being able to source that rare earth supply. But beyond that, we also need to help them provide a strategy and a supply chain on refining and value addition and processing towards making the individual rare earth compounds that can go into the components that enable all of this technology. So there is a substantial amount of work that needs to happen across the full rare earth supply chain to be able to bring this online. And we're right in the middle of those discussions and trying to position the full potential value chain of Ionic in a global context.
And Tim, there's a few questions that have come here, have been raised regarding the location, Africa, Uganda. It's often a question that pops up. I know you're comfortable working there and you often speak about your relationships with government. Can you give our audience a bit of an understanding of how you see the political situation and the way you operate with them and their expectations of you as a participant in the country?
Yeah, look, I think with regards to where we are in Uganda, our experience has been very good. Certainly since my involvement with the project and the acquisition of Makuutu back in August of 2019, our relationships have been strong. It's collaborative, and we're working to a common interest of building a mining industry in Uganda. and demonstrating that Uganda is an environment where you can be successful and work rapidly through the development, delineation of projects to ultimately get towards an operating mine. So, later this year, we'll have our mining license application submitted in Uganda, and then hopefully we'll be in production in 2024, all going well. I think the reality is that the requirement to now go and find the assets that produce the critical raw materials will drive the industry to go into jurisdictions that they probably previously haven't gone to, because you need to find the assets that are producing the materials that are required. So I think that we're trading, we obviously, if this asset was anywhere else in the world, I think we'd have a substantially higher market cap. But I think as we continue to demonstrate the transparent nature in which we can operate in Uganda and de-risk the project, we will see a lot of value be created. And I think, with regards to the location and jurisdictions, in a number of different commodities, we've seen companies move into jurisdictions where 12 months ago they wouldn't have been. And that's purely because you have to go where the assets are. And we've got a tremendous asset here at Makutu, and on the back of that, we're going to be able to be a
Tim's
key...
just frozen. You're back on, Tim. So I just froze on my screen for a moment. Hopefully it was okay for everybody else.
Okay. So yeah, Peter, as I was saying, I think where we are in Makutu and Uganda, we have seen a number of companies move into jurisdictions where previously they wouldn't have been 12 months ago, searching for access to the right commodities and the right projects. And we're no different. We've got a tremendous asset here at Makutu in Uganda, and we know how unique these ionic adsorption clays are. So, I think we're in a good spot to do very well with Makutu long term.
A pretty good report there, Tim. Thanks for the update. What do you think shareholders can look forward to in the coming quarter?
Well, over the next couple of months, we'll be looking to continue to make good progress with Makutu. We're aiming on having that feasibility study completed by the end of the third quarter to support the mining license application in October this year. In the near term, we'll have a re-look at the exploration target at Makutu. We've got a bit of data to fold back in. We had a very successful phase 3 drill program last year where we've confirmed, obviously, clay extensions out to the east, but beyond that, the continuity of the clay across the 26 kilometres that makes up the resource that we've defined to date. So that data will be folded back in. We'll update the exploration target and put a bit of a framework around an exploration program, which will help us understand just how big the project could be long term. But right now, we've got more than enough to focus on advancing Makutu towards that mining license application later this year. With regards to Seren, we'll bed the team down and hopefully be in a position to start that piloting later this quarter. With regards to the refinery and the refinery scoping study, that continues to make good progress, and we'll be in a position to update the market on the potential economics of that. And beyond that, obviously, we continue to do a lot of work on positioning ourselves and positioning the company to take full advantage of the fact that it's a very unique basket from Makutu, and our ability to play a significant role in these new supply chains that are going to form over the next few years.
Very well. Thanks very much for that, Tim. A pretty good update, not only on the resource upgrade, but your views on current markets and where you sit. Something for us all to ponder. We look forward to hearing the good news over the next couple of months. So thank you for your time today, and thank you to everybody joining us. There'll be a recording available for those who couldn't join us here today, and that'll be made available over the next day or two. Thank you very much.
Thanks, Peter.